revision of SAE 3400, which deals with prospective financial information. I have already told you prospective financial information or the financial information relating to future, and these prospective financial information can be either a forecast or a projection or a combination of both. Now, in a forecast, the assumptions that you use will be best estimate assumptions, whereas in case of a projection, the assumptions that you use will be hypothetical assumption. Hope that is clear. Now, scope of SAE 3400. What is the scope of SAE 3400? It provides guidance to the chartered accountant on how to give assurance on assumptions. If you see, chartered accountant, he will not give assurance on the prospective financial information. No, he will give assurance on the assumptions used for prospective financial information, because prospective financial information or financial information related to future. So the chartered accountant also doesn't know whether the same figures will actually arrive even in future also. You cannot correctly predict. Okay, so you will not provide any opinion on those figures. Instead, you will provide assurance on the assumptions that have been used for preparing those prospective financial statements. Hope that is clear. See, this standard provide guidance to engagement to examine report on prospective financial information, including examination procedure for best estimate and hypothetical assumptions. And this STA does not apply to descriptive, or this STA does not apply to general or narrative terms. If you see in the annual report, management, it will speak about its future business in normal, general, descriptive terms, like in the next 5 years our sales will grow this much because of this reason, and because of that the profit will have this much impact. Like this, about future, management will make certain narrative descriptions. For such narrative descriptions, this standard is not applicable. Only for the quantitative terms, only if you have quantified, then the standard SAE 3400 will be applicable. Okay, next, acceptance of the engagement. At the time of acceptance of the engagement, auditor has to discuss, the chartered accountant has to discuss certain points with the management. We call them as terms of engagement. What will be included in the terms of engagement? First is intended use of the information. Okay, for which purpose you will use these prospective financial information? There will be various purposes. Let's say if you wanted to raise certain capital from investors, then investors can ask you to show the picture of business in the next 5 years. Or if you wanted to take a loan from the bank, then bank might also ask you to show the picture of the company in the next 5 years or 10 years. So what is the intended purpose of these prospective information, and to whom these prospective information will be distributed, whether it is distributed to all the users or only to the limited users. Next, what are the nature of assumptions that you are using for this prospective information, whether they are best estimate assumptions or they are hypothetical assumptions. You have to discuss this with the management. Next, what are the elements to be included in the financial in this information, and what is the period covered by this prospective financial information, whether it is for next 5 years, whether it is for next 10 years, or what is the period that has been covered. Okay, and if auditor feels that, the chartered accountant feels that the assumptions that the management has taken are unreasonable, then the chartered accountant, he will not accept the engagement. Next, nature of assurance. Here if you see, the chartered accountant, he will provide assurance on the assumptions but not on the prospective financial statements. He will also provide assurance on whether the prospective financial information has been prepared as per the assumptions or not. Okay, two assurances he will provide. First one, whether the assumptions are reasonable or not. Next, whether the prospective financial information has been prepared as per the assumptions or not. These two assurances he will provide. Next, responsibility for preparation and presentation of this prospective financial information. Obviously, management will be having responsibility for preparation and presentation of this prospective financial information, including making of the assumptions and explaining the basis for the forecast. Next, can professional accountant be associated with prospective financial information? If you see, as per clause 3 part 1 of second schedule to the Chartered Accountants Act, a chartered accountant in practice will be deemed to be guilty of professional misconduct if he allows his name or the name of the firm to be used in respect of a prospective financial information which gives a belief to the users that the chartered accountant has watched for the accuracy of the prospective financial information. But if chartered accountant doesn't watch for the accuracy of the financial information that is present in the prospective financial information, then chartered accountant can sign that prospective financial information. Okay, in the note he should provide that, he should say that he is not watching for the accuracy, and he should also clearly indicate all the assumptions that have been used for preparing this prospective financial information. Then he can use his name with the prospective financial information. Using name with respect to prospective financial information means you can sign the prospective financial information. So chartered accountant can associate with prospective financial information provided he doesn't he doesn't give a belief to the users that he is watching for accuracy of the figures. Next, duties of member who is examining prospective financial information. Okay, if you are examining the prospective financial information, what are your duties? First of all, you have to verify whether prospective financial statements has been prepared on the basis of assumptions or not. Next, you should also see whether the best estimate assumptions that have been made by the management are unreasonable or not. Okay, they should be reasonable. Next, all material assumptions should be adequately disclosed in the prospective financial information, and prospective financial information should be prepared in a consistent basis from the historical financial statements. That means whatever the accounting policies that you have followed for preparation of historical financial statements, the same accounting policies you should follow even for the preparation of prospective financial information. Hope that is clear. Next, examining procedures. See, while examining these prospective financial information, first of all, auditor will see whether he is having knowledge to examine the prospective financial information based on his past experience. Then he will also see whether management is competent enough to prepare the prospective financial information. What is the experience of management in preparing prospective information? Next, he will also see whether the people in the engagement team are having experience to prepare the prospective financial to verify the prospective financial information. Next, he will also calculate risk of material misstatement, that is likelihood of material misstatement. Next, he will see how to what extent these prospective financial information are affected by management's judgment. Next, what is the source of information for preparation of these prospective financial information, and whether the business of the company will be stable or unstable. Okay, all these will be considered by the auditor or the chartered accountant. Next, presentation and disclosure. First of all, the prospective financial information should be presented in a very informative manner. It should not be misleading. That is the first point. Next, you should also disclose all the accounting policies that has been used for preparation of these prospective financial information. Next, assumptions should also be clearly disclosed along with information whether such assumption is a best estimate assumption or a hypothetical assumption. Next, the date as on which these prospective financial statements have been prepared, and whether the assumptions that have been taken by the management are relevant as on the date of preparation of prospective financial statements or not. Even that has to be disclosed in the prospective financial statements or financial information. And if there is any change in the accounting policy, the management has to disclose that particular change in the prospective financial information. Next, report on the examination of prospective financial information. What will be the report? First of all, there will be title, there will be address. Next, you need to identify that these prospective financial information has been verified. Next, you should also refer to the standards on auditing that are applicable for conducting these assurance engagement. Next, you have to specifically identify responsibility of the management with respect to preparation of these prospective financial information. Next, you should also state in your report what is the purpose of these prospective financial information and to whom this prospective financial information will be circulated. And you should also state the examination procedures that you have followed for examining these prospective financial information. Next, you should also state whether the assumptions that have been taken by the management are reasonable or not, and you should also give your opinion on whether the prospective financial information has been prepared as per the assumptions or not. Next, appropriate caveats. Caveat means conditions. See, for some of the assumptions that the management has taken, there may be some conditions like in the past 5 years, sales have grown at 5%. but in the next 5 years sales will grow at a rate of 10% subject to the condition that the research that we are conducting with respect to a particular product becomes successful and we successfully launches that product in the market. Okay, so this is the condition. This condition is known as caveat. Okay, subject to this condition our sales rate growth will be 10%. That is known as caveat. If at all there are any caveats, you need to properly report them in the report that you give. Next, date of report, place of signature and the signature. Okay, next you should also specify in your report that actual results are likely to be different from the prospective financial information since anticipated events frequently do not occur. Okay, you have to specify that the actual results that might occur in the future, they might be different from the prospective financial information, from the information that is shown in the prospective financial information, because the future is uncertain. We cannot exactly predict the future. Because of this reason, the actual figures might vary. Okay, this information has to be given for both projections as well as for forecast. Next, in case of projection, you have to say that, see, in case of projection, prospective financial information has been prepared for particular intended use using set of assumptions that include hypothetical assumptions about future events and management action that are not necessarily expected to occur. Okay, we have taken certain hypothetical assumptions. These hypothetical assumptions are not likely to occur. Okay, that information should also be given in the report. Okay, this point should also be mentioned in the report if the prospective financial information is a projection. Next, documentation. What documentation you have to maintain? See, matters which are important in providing evidence to support report on examination of prospective financial information and evidence that such examination was carried out in accordance with this standard, that is SAE 3400. Okay, so this has to be documented.